Welcome to the Billionaire Mindset Corner, where you'll find inspirational content to help you grow and become more positive. If you haven't already, make sure to hit the subscribe button so you can receive timely notifications about content that's tailored to your personal development. You've likely heard of the stock market, where companies and businesses trade shares and investment values. Investment opportunities abound, but they are only accessible to those who know how to find and take advantage of them. In today's world, working smart is the key to earning. Trading stocks can be a very lucrative way to get involved in the market. The stock market is a highly competitive digital marketplace where the values of stocks are determined by the performance and profits of companies. People make profits in three ways: by owning and holding securities, by receiving interest and dividends on shares, and by seeing an increase in the long-term value of their stocks. Contrary to popular belief, you don't have to sit in front of a computer all day to trade stocks. Investing in the stock market can be much simpler than you might think. In this video, we'll show you how to navigate the market in a smart and straightforward way. The best way to make money in the stock market is not necessarily through the continuous buying and selling of bonds. The secret is to buy a security and hold on to it for the long term. This is the classical Warren Buffett investment style. When you invest in a stock, you're essentially buying a share of a company. This means you've contributed to the company's working capital and they will use your money to make trades. As a result, you are entitled to receive an equivalent amount of profit as a percentage of your periodic share. Additionally, as the price of the stock rises, the monetary value of your share will also increase. To make significant profits in the stock market, you have to stay informed about the businesses that are performing well in the market and have high growth prospects. Here are a few things to look for when selecting a company to invest in. Study the company's business history, with a focus on the last 5 years. Look at how the stock has grown over time and consider the company's performance during different market conditions. Choose a company with strong leadership and sound policies. Investigate the company's practices and their service towards shareholders. Read reviews online and find out how the company treats its investors. To better understand how the stock market works, let's take a fictional example of a company called Silver Bullet. Imagine that at the end of a business year, Silver Bullet made $5 million in sales, but only had $1 million in profits. Seeing that their business prospects were high and they could make more profit if they expanded, Silver Bullet decided to put out shares to sell. They decided to sell 1,000 shares for $1,000 each and allocated $100 of profit to each share. This profit is known as earnings per share. By buying 5 shares, you would be buying $500 worth of the company's profit or loss. For example, there is a woman named Shiba who earned less than $4,000 per year, but she took advantage of the stock market by buying stock with her $5,000 savings. She grew her asset into a multimillion-dollar fortune that appreciated even until her death. Her lawyer and broker reported that she had a $22 million worth of assets. The company can also send cash dividends to you from some of their gross profit, depending on your agreement. This is another way to make money from your stock investment. Dividends can be paid to you in a variety of ways, such as by check or directly to your personal or brokerage account. However, there are other options that can also provide you with financial gain. For example, the company may decide to buy back its shares if it has made enough profit. When a company repurchases its shares in an open market, it is essentially bringing all the shares back home and indicating that the company is financially stable enough to reduce debt and internalize its profits. Another option for the company is to reinvest the funds obtained from stock trading into purchasing more assets for the company. As an investor, you have control over the amount you invest and what you invest in. You may also decide what you want to do with your funds, but this will depend on the options available from the companies you are investing in. To ensure financial success while trading in the stock market, the first step is to do your homework. Just like any business, every investment requires research. You should make inquiries, conduct research, and verify the status of the company before investing. Additionally, you should study the business and invest only in companies that you have knowledge about. Investing with discipline is key to success in the stock market. The market can be volatile and the risks are high, so it is important to carefully and patiently make your investments. If you are unsure about the future of a company you want to invest in, you can start by allocating a small amount and gradually increasing your investment as you become more confident in the company's performance. A disciplined approach to investment will help you minimize the risk of loss and maximize potential profits. Monitoring your investments is essential, regardless of the type of stock investment you make. The frequency of monitoring required will depend on the type of investment you make, but it is important to keep an eye on the performance of your investments. Monitoring means keeping up with news updates, events related to the company and industry you invested in, as well as stock market and stock price trends. It's important to be realistic when investing in the stock market. There is a fine line between investing blindly and investing based on calculated risk. Investing with a calculated risk means that the prospects have been evaluated and seem plausible to a great extent. However, investing unrealistically would mean to invest with assumptions and hopes without considering the real figures. Becoming super rich quickly with the stock market can be a tempting idea, but it's important to keep in mind that there is a high level of risk involved. If you're considering getting super rich within a short time in the stock market, there are a few things you should consider. However, it's important to remember that you are not under any obligation to follow them. Invest in high-growth stocks. Look for companies that have a strong track record of growth and have the potential to continue growing in the future. Take calculated risks. Don't invest all of your money in one stock. Diversify your portfolio and invest in a mix of stocks to reduce the risk of losing all of your money. Keep an eye on market trends. Stay informed about market trends, news, and events that may affect the value of your investments. Be prepared for the worst. Remember that the stock market can be volatile, and there's always a risk of losing money. Be prepared for the worst and have a plan in place for when things don't go as expected. While it's possible to make quick profits in the stock market, it's important to approach it with caution and to be realistic about the potential for risk and loss. It's important to invest in what you understand and what aligns with your investment goals and risk tolerance. Putting in as much money as possible in the stock market can be a risky strategy, but it can also lead to the potential for fast financial growth. Investing most of your money into the market early can help you gather as much wealth and profit as possible based on your potential. However, it is important to keep in mind that this strategy can also lead to significant losses if the market value of your invested stock consistently remains low. Additionally, it's important to remember that investing all of your money into one stock can be a risky move. Instead, diversifying your portfolio can reduce risk of losing all of your money. It's important to consider your risk tolerance, financial goals, and investment horizon before making any investment decisions. It's crucial to also consider the volatility of the market and the stock you are considering investing in. It's important to understand that the stock market can be unpredictable and there is always a risk of losing money. It's important to do your own research, understand the market and the company you are considering investing in. In conclusion, don't hesitate to share your thoughts and reactions and stay tuned for our next video. Thank you for watching.